So it's a pleasure to be here and getting into the big debate about going direct or indirect to the family office route. So before we dig deep into this, just want to give a little backdrop. A quick thing that family office is a privately held setup uh, made to manage the investments and wealth of ultra high net individuals. Traditionally, or in the initial years, they have used indirect options to take exposure to asset classes like managed accounts, PMS, AIF, mutual funds to go into direct private equity, venture capital debt, so on and so forth. However, in the recent years, they have shifted their focus to the direct ownership model using their in-house intelligence for analysis and management of direct ownership portfolios. So starting with this backdrop, my first question is to Amit ji. Are family offices focusing on direct investments in India, and if so, why?
Yes, I think what we are seeing over the last few years, specifically last 4 years, more and more family offices are choosing to go direct. And I would say I think there are different reasons for different people. I think some of them want to go direct in their area of specialization. For example, if the family is already into a consumer products business, they may want to directly invest into a cohort of consumer facing businesses. Alternatively, some other family offices are wanting to amplify their returns and risk in a way into some of the other investments they are making through the funds, and they want to cherry pick and put more money into certain companies which they like. So I think that could be one of the reasons. And the third, which again is an evolution of the market and not right and wrong, I feel is also a function of how the markets are performing. So just like about 2 years back when we had a good run in the private markets, I think every other person was jumping in just because the returns and the valuations were going higher. So I think that the third reason is not something which should be desirable, but one cannot avoid beyond a point. Some of the people do get into that. So I'll just pause here for now.
Thank you, Amit, for these insights. Taking this further from the family office perspective to the fund side perspective. So my question to both the panelists would be TCM sir and Ashwin would be, were direct investments happening earlier in India? Or is it that post-COVID, the investors' appetite and demand has increased for the direct investments? How are you seeing on the private equity side and on the private debt side?
Yeah, so I think there are there's a spectrum of family offices, right? When you look at it, there are a lot of them initially played in the angel stage. A lot of angel groups were there. They were taking bets, which could be anywhere from 5 lakhs to 5 crores, but more likely about a crore, invest as a group. And this I'm talking about 10, 15 years ago. But, and some of them really hit jackpot, right? So there have been people who have invested in Ola and other companies which have made excellent outcomes. And then there are only a few very structured family offices who have built teams, because I think the biggest challenge that, so like I think Amit said, there has been a lot of interest in doing direct. There is no dearth of capital, but I think each one has to look at it in terms of what is their right to win. Because when there are funds, and there are hundreds of funds today proliferating, and they do it for a living 24/7. So if somebody is trying to look at family office saying that, look, I am going to do it as part-time while I am running my own business, or I will have maybe one person to manage investments, they might find it very challenging to do that, because then they will only react to what comes to them. They won't look at the full industry to decide whether they are investing in the best company or not, right? Within a category also. I think if somebody wants to set it up as doing direct, then it is important for them to build a team. And that requires a minimum level of capital to be able to justify a team, which can go have a full-fledged thesis on which they can invest in. There are others who are taking a very interesting model, right? So there are many family offices who are part of our fund, but they also get based on their commitment to the fund, they get a co-investment approach. And in co-investment, they are able to work with the fund manager who's getting them the access. So there is somebody who also can monitor, because there are very few family offices which will be able to invest large enough check to get a board seat or affirmative rights. So who's to take care of the interests of the family office? Then the fund manager through whom they can participate. So that they are taking a approach of saying that, okay, I invest in fund, so there is a cherry picking that takes place. Somebody has worked hard to create a pool in which I can invest, right? So that is a thesis that some of them are following. Each one depending on their ability to build. There are about maybe 4 or 5 family offices today have their own large teams which can go win deals.
Got that. How about you, Ashwin? What are you seeing?
So I agree with what TCM sir said. I think there is a general maturation of family offices. When we started investing as family offices, I think the knowledge, the know-how, skill set was still evolving. So now we see very sophisticated family offices. In fact, some of the family offices are larger than funds out there now. So those family offices have the expertise to go direct. What TCM sir said was very important, that if you're a new family office and just setting up, maybe don't have the team, then the safer way to do is go through funds, and through the funds get co-invest, so that the fund manager is looking after your interests. And then as you build the team, you are in a state to figure out which is a good deal to go direct or not, then start doing direct. That would be my views.
Sure. Thanks, Ashwin, a lot. So, picking up from where both of them left, Amit, as a family office, what are the benefits and challenges equally of going direct?
The challenges are, I think, as TCM also pointed out, I think the easy part is in selecting a company and writing a check. But I think that's just the start, and that doesn't mean anything that's easy to do, anyone can do. See, I think the governance, understanding of the sector, to help the founder, etc. These are all, and to get exits, it's not easy. Just because you have money and you are larger as a family, larger than some of the funds, doesn't give you any right to win. So capital is now a commodity. So the biggest challenge, I think, is some people start getting feeling that, why should I pay fees and carry and just do it myself? It's easy just because I have the money pot and a lot of deals come to me, so I can also, write the check. I think that's not right. I would go to the extent to, so that even in something as simple as, or apparently as simple as listed equity, I don't think it's easy for anyone to do direct. While it's, just like cricket, politics, stock market is something we all think we understand in India. But if you want to really create a good quality portfolio, you have to also have best quality resources and get the right man to manage the portfolio. Same thing goes in a way more larger way in alternate assets, in private equity, venture capital, and debt also. So you need a specialized team. You need to understand the sector completely. Just because you have capital, please don't fool yourself in trying to get into direct deals. Co-investment, yes. Co-investment is also, again, as I said, amplification of risk and reward both. So I think that's a choice one can make. But the other heavy lifting part is at least taken care of. So it's, the weightages change. The portfolio constructed by a fund manager may be a certain weightage. But once you start doing co-investment, you are now getting into and changing the weightages. So which could go very well, or it could backfire also. You could underperform or outperform the fund from that perspective.
No, I agree. I think very well said. Probably, if TCM, sir, you can elaborate a bit more about, although you talked about evolved family offices, and you rightly said which are bigger than the fund size itself. But for many, family officer journey is just beginning. They have not evolved to that stage. For them, what would be the benefits of going indirect?
I think going indirect through a fund manager, in fact, I'll share with you one interesting anecdote. We have a fund of fund from Zurich which used to invest in us. And we introduced them to one of the largest family offices in India who have a very established setup for public market, for private market, all of it. When they met and then they spoke, this fund of fund said, the net return after paying a second layer of fee for the fund of fund will be better than what you will do if you directly invested in the funds, right?
Hannah, how would that be if you could elaborate a bit?
Because the access to the best funds, right, they have globally. So which generate, let's say, first quartile or first decile return. So even after paying fee and carry, the returns will be better than getting access. So when you go to first quartile, first decile fund, there is a long queue of people who want to invest,
Right.
right? So most of them don't even get access. Not even fund of funds, even in funds. So our peer group funds, most of us, when we do, we get oversubscribed. Our last fund, we went out to raise, we got 25% oversubscribed. So when that happens, then fund manager also does not want to accept too much capital, which will create undue pressure of deployment and potentially the risks of investment. Because of it, they actually stop at a cap level. Now, then you run the risk of not being in the best funds. So I think what they should look at, if you go direct, the visibility of getting access to the right deals itself goes down significantly,
Fair enough.
right? And again, it cannot be a side activity. It has to be 24/7 activity, lot of value add, and that is what people are looking at. There is another big risk of going direct. And the last 2 years, a lot of people have realized it, and me and Amit have spoken about it because we have seen examples of it in many other families. There is a FOMO, right? So just because a brand name investor, I don't want to take out the name, invested, people have gone and family offices have gone and given a premium to that, right? Just I'm getting onto the gravy train. Today that company is possibly at 25% of the price at which it got invested. The fund manager has taken a portfolio approach. And I always say that fund managers have a share of their mistakes, right?
Right.
And this could be one of them. So they take a portfolio approach. So long as they deliver a portfolio return, it doesn't matter for them. But if this family office, if they've done their first or second or third investment in this, they will be burnt forever about this type of losses.
Interesting. So when you talked about FOMO, I had a question to you on this. Carry caution on this is that many since you are seeing a lot of family offices coming in for co-invest or direct, is it really a shiny object syndrome that everybody wants to jump and pick up the train and go for direct? Or families understand the nuances of going direct or co-investment and take it responsibly? What's your experience in terms of last couple of years?
This is a very interesting behavior change that we see here. Those who actually can invest meaningfully in a fund which entitles them to co-investment are very nuanced investors. They know what they like, they know what stage, they understand the risk. So even when co-investment is offered as an opportunity, they decide whether they want to invest or not. I really appreciate that. They don't simply say that, okay, co-investment available, I will invest. The same company, if we send it to 10 family offices, maybe 3 will pick it up on an average, right? So we appreciate it. Because we understand them, we also know why they did not pick up. They discuss with us the details and then say, this is the reason I am not, right? That is good. Those who do not have the co-investment, right, because the other side is always green, right? So when they get it, then they just want to go hammer and tongs in it.
Got that. Interesting perspective. Now, coming to Amit ji, is that, as there are larger family offices who are deep pocketed with capital, and they do understand that going direct as a larger part of their, or a significant part of their portfolio will have its own challenges, and it's a resource heavy. It requires a lot of infrastructure, deep domain knowledge. How are the fraternity going about setting up these capabilities in-house?
I think the requirement is very huge to set up a capability in-house, but I'm not sure we are as evolved as a family office fraternity right now. Yes, there are circle of area of competence, as I said. If one is already owning a automobile business or a consumer-facing business, then you have some expertise in that. But there also it could be biases also which work against you. But otherwise, barring a very handful of such families, not many in the country, I think today, can boast of saying that we have a very full-fledged professional team which is at par and capable enough to also raise third party money. So for me, the test is, if you are that good enough, if you were to go out, would you be able to raise third party money also? So I think at the moment, because the family office scene in India is also evolving and it's relatively new as compared to what is there in Europe and US. So I think we are coming there, but I think it'll happen faster than we think. Hopefully, there'll also be some lessons learned, because I think this entire FOMO, etc., is again a very human thing. I think whether it is individual retail investors or family offices cannot be saved beyond a point. But I think one will have to be conscious that if they want to do direct, they have to first set up the capabilities. And that capability setting is not going to be easy, because talent is going to be the most important thing there. And getting the right talent to work for a single family versus work for funds is going to be a challenge. So you got to get purpose driven people who are in alignment with your purpose and with your values. Then I think, and compensation obviously you have to pay. So it's going to be a task. It's not an easy thing. It's a full-time job for a fund manager. The single family office will also have to have it as that sort of effort has to be put into it.
Right. Thank you so much for candid answer. So Ashwin, coming to you, as Amit ji just said that probably it might come sooner than later. Yet to walk that path with the European and global family offices. So in India also, single family offices might compete for qualified resources, experienced resources. Their spending will increase on software, platform, MIS, cyber securities, to name a few. Will it eventually have a bearing on the AIF industry for resources, cost elevation? How do you see it in coming years?
Yeah, that's a good point. I think as more and more professionals join the industry, the AIF industry, family offices will also want to have the best professionals, right? Typically, as family offices get larger, they will compete for talent with the AIFs. Many times I've seen that a fund manager's team members, because they've been interacting sometimes with family offices, they will join that family office. So that can happen, right?
Yes.
This is again if you look at Europe and the US, family offices is a 100 to 100-year-old concept, right? So it's not in India, we're still evolving. So we are seeing family offices now get larger. They have an interest to do direct deals. I think that next stage is for them to set up a very professional team, like Amit was saying. That will happen, and they will compete. And one of our large investors runs a very successful family office, and honestly, their returns are stellar. They could be top decile among all AIFs. So clearly, there are people who are doing this the right way. They've gone ahead and hired the right people. They do all their due diligence, whether it's a fund or direct deal. And like TCM sir was saying, they're very nuanced. Just because a fund manager offers them a co-invest doesn't mean they will take it. They will do their due diligence. They will negotiate on fees. So all of those things makes for a very exciting organization. And I think family offices will be you will see a wave of family offices in the next 10-15 years.
Good.
I just want to add one point in this, which I have seen, and it's a challenge people are going to face when they set up family offices. What is the role accountability for the family office head, professional manager whom you get, and the family person who's involved in deciding? If you are doing a backseat driving to some extent, you cannot hold them accountable for performance. If you want to hold them accountable for performance, are you willing to actually sit in the backseat without interfering? Right? I think that is going to be a very important, threshold that will have to be figured out.
Interesting. You want to add on to this,
I
Amit?
think it's very correct, and I think if you see what has happened in Europe, etc., so with the 200, 300-year-old family offices, the family is actually nowhere visible. They are just somewhere in the trust where they get the benefit, but on a day-to-day basis, even they nowhere visible. And there, in fact, I've seen some examples in North America, Canada, and all, where the principal is very much there, but he just takes meetings 2 times a year. The family member doesn't want to involve himself. So that is, I think, the level of delegation that I think is possible, and that will bring out the best, because then a professional will get to play his game. Otherwise, as he said, backseat driving, and it is not good for either. Two people driving a car is never going to reach anywhere.
Interesting.
Just to add, there is one family office which has been involved with us from day one. I still haven't met the family member. So for
Lovely.
the last 7 years, they've been backing us. So that's the level of maturation that some family offices in India have reached. So like Amit was saying.
Correct. So, coming to the next part, I want to take both of you's views, Ashwin and TCM sir, is about. Now, let's talk about the other side of this table that, when you are going and sourcing deals, so are family offices also sourcing deals on their own. And one, is there a competition on that front from the family office side? And are there instances where an investee company has chosen a family office over a fund? If so, why? And if so, why not?
So I think in a stage where we operate, which is seed and A, we have not seen much of challenge coming, right? So some of the family offices possibly have become, or some of the individuals who have been successful as angels, or some family offices have become like put together a fund, and so they operate as a fund. But other than that, we have not seen much of a challenge, because I think the entrepreneur at that stage is looking for not just a single check.
TCM, they don't operate as a fund. They think they operate as a fund, right?
Okay. But I think there the entrepreneur is looking for what is the network that you have created, what is the success the fund has created. It's a history of 10, 15 years that people look at how many unicorns you have got. Can I learn from any of your entrepreneurs? All of those things. So there the competition is largely amongst funds, right? It could be an angel fund, a seed fund. It could be a early stage fund, global fund, Indian fund. All of us compete there. Unless the family office has got a deep domain knowledge which is really wanted by the entrepreneur. But in later stage where bigger family offices organized, they have a few $1 billion which they deploy every year, right? Or they have a large team which goes out and sources. In fact, we have seen that, and we have actually encouraged some of the companies to take that family office money because they can add value. They are, except for the fact that they are a family office, they behave like a PE fund, right? Growth fund. There we tell them saying that, okay, these people can write multiple checks, not just one check, and follow on checks they can write. They can add substantial value by throwing an operating partner at you, right? Based on that they take. Otherwise, those who come through, let's say I buy some ESOPs and things like that, there's largely reluctance to actually allow so many of them on a cap table.
Got that. So, coming to Amitji on this is that in which asset classes, so family offices are trying to go direct in majority of the asset classes. So, which asset classes still today they prefer majorly not to go direct?
I think real estate maybe for many families, like though real estate comes naturally, but I think some of the people who understand that real estate is a very difficult subject and they don't want to dabble into directly. So I think real estate is one place specifically where you are a promoter of funding or joint development projects. That is, I think, one area where most families would not want to deal directly, because it's a very nuanced thing, and it's a very highly operationally intensive thing, and city to city it changes. So I may be a Chennai based guy understanding the Chennai market, but the moment it goes to NCR, it's a very different ball game. So I think that's one area. Then I think some of the new age technology, whether it is Web3, etc., not many families have that understanding. So there, I think, and again, the answer is very contextual. Each family has their own comfort level, something they would want to do, and three things they would not want to do directly. Some other opportunities are not available in the market. For example, sustainability and all are now coming up. So there, I think indirect or the fund opportunity may be limited, and some people may want to do it directly there.
I got that. Really, thank you for all of your views. I think the times is equally up. Anybody wants to connect them with them, they have a panel member discussion rooms for extra questions and all. So thank you guys. What I summarize probably here, all of them saying is that that there will be direct and indirect to a great extent had to work going hand in hand. There will be certain areas and pockets where family have expertise. They choose to go direct, and in some areas where they believe that the capability skill set lies with the other side, indirect is the preferred route, and I believe that's the way the industry will evolve. So thank you so much for your views. Thank you, the esteemed panelists.